opportunity to short the market. That's why some people call it order blocks. That's how you make money with this support and resistance. Another, for example, short position. And now, if you want to be a successful day trader, understanding support and resistance levels is absolutely crucial. Support and resistance level is the absolute fundamentals of technical analysis. Every trader, when he starts his day trading journey, starts by learning and understanding support and resistance levels. Now, understanding only support and resistance levels is not enough, but it's a great start for any day trader who wants to eventually become successful at analyzing and successful at making consistent profits. But in reality, a lot of traders only know the general concept of support and resistance levels. They know that a support level is a level that basically reverses the price, and same with resistance, but they do not really understand, for example, the differences between supply and demand, between order blocks, between support and resistance levels. And it is crucially important for everyone to understand the basics, and then you can add some other tools to build up your trading strategy. So before we move on to the charts, let's understand what are support and resistance levels. Now, you probably have heard a lot of different concepts like supply and demand, key market levels, order blocks, support and resistance levels. Well, in general, they all mean the same thing. Basically, it means that there is a level, a specific price level where the price reacts. So if it is a support, usually the price goes down, reaches the level, and is being reversed to the upside. If it is resistance, then the price approaches from the bottom to the top, approaches the level, and then is being reversed. And there are a lot of different ways from where these levels comes from. So usually it has something to do with big institutions or big banks. So usually, for example, that's why some people call it order blocks. Usually some, for example, even it doesn't matter whether you're trading crypto market or forex market, sometimes big institutions are always analyzing the markets, and sometimes huge orders comes into the markets which push the price either upwards or downwards, and usually when that push happens, support level is being created. And another important thing to understand that support and resistance level can be a little bit misleading, because usually support and resistance is the same level. Usually people think that it is either support or resistance, and if it is support, it cannot work as a resistance, but in reality there are just horizontal levels that affects the price from both sides. So it is really important to understand that. Now we can move to the charts and understand how these levels are being made, what do they look like, what are different types of market levels, so you can understand them better, you can identify them, and most importantly, you can make money with them. So what are these support and resistance levels? Well, for example, as you can see here, currently I'm on the Bitcoin against the USDT chart. And in general, for example, in the crypto market, we know that there are huge institutions, there are huge banks that usually, for example, accumulate some cryptos or puts big orders, and therefore they basically move the markets. And when they move the market, usually the level is created. And for example, we can look at this level right here, and you can mark these levels as either lines or horizontal boxes. So for example, the line usually is used for precision purposes. So if you can see right here, look at these touches over here. We have a level marked over here, and we have one touch, we have second touch, we have third touch, which is false break, and then we had fourth resistance. So basically, as you can see, these levels works pretty well. In general, when the level is created, then that level usually holds, and that's why people can actually make money from it, because they can anticipate where the market will go. And sometimes very traditionally people think that support and resistance levels are only lines on the chart, but in general they can be also a trend line. A trend line has a different name, but we can see right there that, for example, price comes to this trend line and is being reversed. Then it comes to the trend line again, and we can see that here we have a false break pattern. So in general, trend line acts as absolutely the same way as support and resistance levels. So it is really important to understand that support and resistance levels are not just horizontal lines, but it can be a trend line as well. And another important thing, that support or resistance levels are usually not as thin as this line. they look something like this. So they are much more bigger. And for example, how do they form? For example, here it is no coincidence that here we have a very strong, in this case, resistance level, because look at the price. We have the price of $38,000, and this is what we call a round number. And at round numbers, we know that, for example, institutions trades in this way. So usually institutions, they do not put some random orders at some random numbers, but for example, if they are putting a huge order, they are usually executing it on round numbers. So for example, we have 38K, and then we have a lot of resistance over here. So here some big institution or some big bank or maybe some big investor shorted the market, and therefore we have this result. So it's almost always the same. The retail cannot move the market with their small orders. So usually some sort of big institution comes and puts, for example, a big short order, and then another short order, and so on. And then all the retail identifies these levels, and that's why they work so much. So first of all, they are being created by institutions, and then the retail understands that, for example, here we have a level, and then we can trade according with it. And therefore, the price is moved even more according with this particular pattern until it breaks out. So how a day trader like you and me can make money from this information? Well, first of all, you need to understand that you usually trust support and resistance levels, but you have to identify them correctly, because the problem with a lot of traders is that many traders see different things. So for example, maybe you have identified support and resistance levels, for example, somewhere over here, and you would be correct, but maybe you misidentified the level, and then the institutions doesn't look at the chart the same way, and then you are just losing money because you cannot predict correctly. So how do you predict correctly? Well, there are first of all, you have to have at least 2 touches to confirm the level. So if you have 1 touch and you mark this level, it doesn't mean anything, because for example, this zone was not confirmed by another reversal. But if you have a second reversal, then you can already anticipate what will happen in the markets. For example, over here you have a strong level, and we'll talk about later about the reversals, but in general, now we have identified the level, and now we can anticipate that the market will come again to this level. And at this point, usually that's why you not mark it as a line, but rather as a zone, because you have to be prepared. You do not want to open a position too early when the market doesn't reach the support or resistance level, and you do not want to open it too late when the market is already above the level. So in this case, now it is a great opportunity to short the market, leave some breathing room for stop loss, because sometimes, and not even sometimes, but usually the price goes a little bit above the level and then comes back. This is a false break pattern, which we'll discuss in other videos, but basically that's how you make money with this support and resistance level. And then we can see over here we have another level. Now, how can you simply look at the chart and identify these levels? So if you want to identify these levels, all you need to do is basically look where the reversals are happening. For example, if we have an upwards moving market, so that we have a bullish trend, and then suddenly the reversal happens, for example, like this. The market was moving upwards, everybody was happy, everybody was hyped up, especially because this is Bitcoin, and then boom, the price goes down. So if we have this sort of reversal, which I call trend break, then we have a level. The level is created. And for example, over here, the market was moving downwards and then it suddenly turned up, and that's why over here we have another support level. And same thing over here. So we have 2 different types of levels. So one level is trend reversal level. So if we have a strong upwards moving trend and then the price suddenly reverses, that means that we definitely have a resistance level. And another type of common levels are usually either pattern levels or consolidation levels. So we all know how consolidation looks like, or side moving market. Basically, simply, side moving market is when the market is just moving sideways, neither up, neither down, but just moving sideways. And then we have then the price is trapped between 2 levels, and this is a great place to make some money from reversals. So this is all the essential information that you need to understand about support and resistance levels. First of all, it's important to understand how do they even form. The other important thing is understand different types, understand the general concept that basically all of these different names like order block, supply and demand basically mean the same thing, because some traders in the industry talk about it like these are separate things, but in reality they work the same, the definition is the same, and the same way they are formed. So that's it for this episode. Hopefully you guys enjoyed it, and see you in other videos.